Hey everyone, thanks for joining us for another deep dive. Today we're discussing something very important.
Especially if you're thinking about getting into the stock market. We'll talk about scams and how to protect yourself.
You might have heard the story of a techie in Bengaluru who lost a huge amount of money.
It's a shocking story about a stock market scam involving a lot of money.
Yes, it was a massive loss. 91 lakh rupees.
It's hard to believe how these things happen.
I know, it's really scary.
That's exactly the kind of thing we'll discuss today. To help us break this down, we've got an expert who's great at simplifying complicated financial topics.
They also have a knack for spotting scams.
I've been doing this for a while, so I can spot the patterns pretty easily.
It's a jungle out there.
It really is.
Today, we'll arm you with the tools to not just survive but thrive. We'll explore how these scams work, the warning signs to watch out for, and practical steps to keep your money safe.
That's the most important part.
Let's start with the Bengaluru techie story. It all began with a WhatsApp message offering stock market training in exchange for votes in an online competition.
At first, it seems harmless.
Exactly, that's how they hook you in.
This techie started attending online classes and joined a Telegram group where a so-called trading guru offered stock tips.
There were two apps involved. One showed investment details and supposed profits, while the other was for making the actual investments.
They made everything look very official.
The techie began seeing 5 to 10% profit daily.
That's a huge red flag.
Then they promised investments in initial public offerings, guaranteeing 50% profits.
Those kinds of returns are unsustainable. So,
Exactly. Eventually, the techie had invested 91 lakh rupees, thinking he was on his way to becoming a millionaire.
that's heartbreaking.
It is. Afterward, the scammers demanded more money for supposed taxes and fees, and once paid, they disappeared.
Go ahead, it's just awful.
Nitin Kamath, the founder of Zerodha, a brokerage firm, mentioned that over 11,000 crore rupees have been lost to scams like this in the past 9 months.
That's billions of dollars.
Exactly. What's worse is that they're now using artificial intelligence to make scams even more convincing, like creating fake videos of financial advisors.
It's terrifying.
We need to be extra cautious. So, what practical steps can people take to protect themselves?
The first step is awareness. Understand how scams work. Unsolicited messages promising high returns and apps that seem too good to be true are major red flags.
Any legitimate investment opportunity will give you time to research and ask questions.
Always check if an app is registered with the Securities and Exchange Board of India. You can also verify company details on the Ministry of Corporate Affairs website.
Do your homework before handing over any money.
Absolutely.
What about investing safely in general?
Understand the risks involved. There are no guaranteed returns. Make sure you learn the basics of investing before jumping in.
Diversification is key.
Yes, spread your investments across different asset classes like stocks, bonds, and real estate.
How do you figure out the right strategy?
It depends on your risk tolerance, financial goals, and time horizon. Consulting a financial advisor is often helpful.
Discipline is essential. Avoid making impulsive decisions.
Investing is a marathon, not a sprint. Stay informed, stay patient, and stay disciplined.
Great advice. Thanks for sharing your insights.
Thank you. Stay safe and invest wisely.